Janet Yellen. She was making some interesting statements last week. Let's take a look at some articles. Article says on USA Today, Yellen pricking bubbles with sharp Greenspan-like language. Here's what the passage said. Yellen tried to talk about valuations and particular broader indexes. Some broad equity price indexes have increased to all-time highs since the end of 2013. However, valuation measures for the overall market in early July were generally at levels not far above their historical averages, suggesting that in aggregate investors are not excessively optimistic regarding equities. Nevertheless, valuation metrics in some sectors do appear substantially stretched, particularly those for smaller firms in social media and biotech industries, despite a notable downturn in equity prices for such firms early in the year. And if you want to look at this statement closely, this is actually a turnaround compared to what Janet Yellen was saying earlier on. She's saying that, hey, there's no bubbles here and there, but I think the pressure picked up on her and she started to look at the data closely and saw that her critics were right. There is definitely some frothiness going on in the biotech industry and the social media industry as well. If you look at some stocks like Facebook, you want to look at some biotech stocks with valuations or PE ratios close to 100. So yeah, she does have a point, and it's good to see a Federal Reserve chairman at least acknowledge that. But despite her acknowledging that, she still is the Fed chairwoman, and interest rates are at zero, which is an unfortunate situation, which is not her fault. It was due to the fault of the previous two Federal Reserve chairmen. But let's take a look at a few other things that she has to say. Here's the article. Yellen, economy still needs Fed stimulus. Well, if you look at this article closely, it doesn't really talk about Federal Reserve stimulus or how we need Federal Reserve stimulus. That doesn't mean Janet Yellen hasn't said that, but if you just look at this article, you can't decipher that based on reading this. But there is one important line where it's quite interesting. Critics argue that the Fed could pump too much easy money into the economy, triggering a bubble or broader inflation. Yellen noted in her remarks that prices of real estate stocks and corporate bonds have risen but remain generally in line with historical norms. Sure, these asset prices may be in line with historical norms. However, this easy money is not going into the pockets of the middle class. That's why you see a lot of people in their 20s and 30s living, unfortunately, how should I say it, in the basements of their parents. And I do know some people living with their parents, but that's how bad the economy is right now. And then a little more in this article. Most Federal Reserve officials expect an increase sometime in 2015, but Yellen noted that if the labor market improves more quickly than expected, rate hikes could occur sooner and be more rapid than currently envisioned. Here's what I have a problem with. So if the labor market improves, well, if you look at the labor market right now, it says that unemployment's at 6.1%, but that does not take into consideration the total labor participation rate. If the total labor participation rate were calculating the total unemployment, and also if you look into consideration of these part-time employees being counted as full-time employees, the rate would be much higher. So I have no idea what Yellen is going to look for when it comes to raising rates. I mean, suppose it goes back to 4%, but at the same time, the labor participation rate continues to dwindle, right? So that would not help at all. But if you want to look at another situation, you have to look at what could their endgame solution be, or how will they try to kick the can down the road. And obviously people are going to say, hey, it's inflation, right? The cure for asset bubbles would be inflation. Let's take a look. What I don't want to see is what this article is talking about, but that could end up being the case. We shall see. whether they have a deflationary head case or not. But let's look at the article. The cure for asset bubbles: inflation. A central banker has many tools at his or her disposal, including that of the bully pulpit. And then, like I said before, the NASDAQ Biotech Index, which trades at 500 times its earnings, slipped nearly 6% in the wake of being identified by the Fed as having stretched valuation. So, just talk about a frothy environment. But let's just look at a few other parts of this article. But for all concern expressed by Fed Chairwoman Janet Yellen and the central bank this week that certain asset classes were rather rich, we are unlikely to see preemptive action in the form of tighter rates to nip excessive or bubbly prices until the economy is much stronger and inflation is firmly established. See, what's the dangerous part of what this author is saying is that you probably won't see Yellen act until the economy is much stronger. Well, the economy won't get much stronger under an easy money system. I mean, you may have asset prices go up and the rich get richer, but for the average middle class individual, well, unfortunately, they will still continue to struggle or live paycheck to paycheck. And then look at this, and inflation is firmly established. Okay, so many individuals don't think that we have inflation right now. That's the dangerous part and scary part, that people actually think like that. And we could look at a few metrics, like the CPI says that we have inflation at 2%. Janet Yellen says we have no inflation. So she's clearly living in a bubble right now. So if you look at some metrics that I'm looking at right now, you see the CPI index is roughly over 2% now. And if you look at, what is it called? The Billion Price Index, they say that inflation is 2.32%, right? Again, my criticism with the Billion Price Index and also the CPI, they don't look at goods where the packaging size has decreased. They only look at prices. I know I'm going to see some comments, whiny comments, saying that, hey, what is this index? The Billion Price Index is in line with the CPI, this and that, but once again, criticism is they're not looking at the packaging sizes. So, what is the real inflation rate? It's obviously higher than the 2.32% that this index is saying. Now, if someone did a study on actually saying, okay, we could look at packaging sizes as a way to measure inflation, well, there you go. That would be a much better index than this. But this is definitely better than the CPI, no doubt about that. But the CPI is now indicating inflation. So that's something to note. So I hope this article, what this individual is saying, is that they're going to wait to raise rates until inflation has fully materialized. Then what's going to happen then? Once inflation's out of the bottle, right? Or once you take the genie out of the bottle, well, it's hard to put it back in. Unfortunately, look at what happened in the 1970s until Volcker aggressively raised rates. Or what could actually stop that nasty inflation is if you see some sort of economic disaster in China, right? A deflationary head fake. So either way, whatever course of action is going to take, they're going to continue to keep rates easy until the inflation gets out of control, or B, China blows up. So anyways, it's going to be a fun and bumpy ride, and we shall see how Janet Yellen's going to react. And based on past history, it seems like she's going to repeat same mistakes as Greenspan and Bernanke in the past. Thanks for listening to me, guys. I'll probably do some videos later this week. I should have some more time. And I want to be doing more videos, but once again, time is a factor. Right? Some people think that I'm not doing videos just like other YouTubers aren't doing videos. Well, my reason for not doing videos is time. And it's quite interesting that all these YouTube channels. You don't see videos from them anymore to the extent that they used to. So just wanted to say that I'm not doing it like some other channels out there. It's just if I had more time, I'd be doing it every day like I used to. Anyways, thanks for listening to me, guys. Talk to you later. Bye.